Good morning, it's Jeffrey Cohen. Tuesday, July 26th. Here bringing you live pre-market action in the summer. So summer markets are a little bit different. I'm Jeffrey Cohen. I'm an investment advisor representative with U.S. Advanced Computing Infrastructure. We're a registered investment advisor in Illinois. We help clients, typically institutional or wholesale investors, with analyzing the market, understanding the trends, understanding kind of the deep optimizations within the market so you can make better investing decisions. We make videos in the morning basically just to help you get smarter, help us get smarter, and to give us a chance to look in a structured way at the market. So we were on vacation for a week. We came back. What's happening, Jeff? What's going on? And so first thing I notice is, and this is CNN Business. This isn't a site we normally highlight. We can see Walmart's down almost 10% on 420,000 shares traded pre-market. Now, normally people don't trade pre-market, and so that's down quite a bit. I mean, when Walmart moves 1%, it's a big day, and so down 9.7% is a big deal. In fact, overall, the Dow Futures are down, S&P futures are down, and the NASDAQ futures are down. So U.S. equities are set to start lower. There's a real question, like, what happened? So what Walmart said was they have too much inventory, right? People have to, they got to sell the inventory. They got to lower the prices. They claim that it's not store specific, but the rise in gasoline prices and the rise in food prices are making general merchandising more difficult. And so lawn chairs, appliances, small appliances, sheets and pillowcases, whatever, people just aren't buying because they have less money. And so we knew that. We've talked about this for a year. Gasoline specifically, $1 spent on gasoline is $1 not spent on another consumer, expense. And so it makes sense. And you see TJ Maxx is down, Best Buy is down, Target is down. Don't know what's going on with Moody's. That's interesting. So, bad day for retail today. I'm not sure I was that surprised when I saw it. But the surprise for me is the move, the size of the move on Walmart. Down almost 10% this morning. So we'll keep this tab way over here, and we're going to keep looking at some other stuff we saw. So we track a set of stocks which we call specialty retail and furniture. Furniture because of Flex Steel. If we take a look pre-market, so of course we've talked about Walmart, but Rent-A-Center. So Rent-A-Center has not been doing that well. It's at 23.52, closed yesterday. The 50-day moving average on this is 23.62. And the 200-day moving average is 35.52. Now, we looked at Rent-A-Center. It was in pretty good shape when it was probably trading closer to 30. It wasn't a buy for us, but it was a pretty good company. And so when it drops this much, it's kind of a big deal. But pre-market changes, American Eagle Outfitter, The Gap, Ross, Kohl's, Target, Hanes, Dick's, Macy's, Best Buy, Nordstrom, you name it. Dollar General is down. Now, we took a vacation up in the UP in Upper Michigan, and we saw a lot of Dollar Generals. They don't look so good from the outside. I'm not a Dollar General shopper, but Dollar Tree also didn't look so good. We went into a Dollar Tree. Interesting, the selection of products for $1.25 in the UP was much more robust, much more unique than it was, let's say, down by where we are in Highland Park. So North Shore, Chicago, pretty affluent area. Dollar Tree seems to have a pretty standard kit. Up in the UP, there were a lot of items that would normally be $3, $5, $10 in other stores, selling for $1.25. Short-staffed, messy stores, pretty tough. In fact, the Dollar Tree by us has started closing earlier because of staffing issues. And so, retail's got a different issue, which is it's got labor issues. So you've got not selling as much, but you've also got less labor, which means it also could be specific to the retailers. So I love Walmart at 119.75. I've loved Walmart for a long time. I actually I like Walmart. Question is, the market doesn't like Walmart, right? And so, who am I to bet against the market, right? Not today, not in the summertime. So, let's take a look at what else is moving. Coinbase. I think I saw something about Coinbase, but that's tough. What's interesting is Deutsche Bank is still down. Credit Suisse is still down. I don't know, not a lot of news in our indices, but if we look at the regional banks, what's interesting is if we go to summary, right? So yesterday the banks, there were some down, there were plenty of ups in the banks, and so we saw some early earnings. Pretty excited about what we saw. We saw operating income was up. We saw a lot of things on banks. We follow banks, so I'm not going to say anything. Scratch anything we said about banks. We do not have any active investments right now in the regional banking sector, but we will. And that's one where you got to call me. We're not a subscription service. You just got to call me. We have a good conversation. I'll tell you what we're thinking. Cannabis and tobacco. Always interesting because when gasoline gets more expensive, you have less money for tobacco. And we saw 4 different bands this weekend. And wow, was the cannabis business hopping at the concert venues that we saw. And I wouldn't count cannabis out. If anything, I don't know, maybe 20% of the people were probably high in these huge venues. And, you just saw it. We saw a lot of fights, actually. We saw a lot of violence, a lot of aggressive action, a lot of inappropriate, just you name it, touching and fighting and kind of mob behavior at some of these concerts. It's funny, when you're in your 50s, you used to go to concerts, you're not used to having to step around multiple fights and having people jumping up on picnic tables and dancing and just knowing that picnic table could break and nobody cares. And then when people talk to you, their eyes are glassy and they're just completely insane. We saw quite a bit of that this weekend. And I don't know. I think cannabis is a big part of it because, wow, were people stoned this weekend. We do not, my wife and I do not take drugs. I mean, we'll have the occasional drink. Personally, I like whiskey, but it was pretty rough. We look at the money managers. Pre-market, you have more down than up. Yesterday evening was a tough evening. We came back from vacation and we're looking at the market and they looked very, very negative. Like Ameriprise was down to 226. But then this morning, it's not trading, so it's back to 246. A $20 shift in Ameriprise does not make any sense to us pre-market. All right, yeah. So what else? And good morning, by the way, to our listener. I appreciate that. Other stocks that we look at, right? These are stocks that tend not to move. So Verizon Wireless tends not to move. Now AT&T has a reason for moving because AT&T warned about how the cash conversion cycle is affecting them. So remember we talked about retail before, and we talked about how $1 spent on gasoline is $1 less spent on other, general merchandise and food. What's interesting is when food goes up, so now gas goes up and food goes up, people have to cut somewhere, and it seems like they're cutting in their cell phone and their home internet service. And maybe it's not so urgent to have, all the telco that we've been used to. And so I look at AT&T, and I'm not a fan of AT&T. AT&T has been a terrible money-losing investment for investors for a very long time. In fact, if I had to make a list, I would keep away from T. I would keep away from IBM. That's another way just to destroy shareholder value. I'd keep away from Intel. Intel's a terrible stock for investors over the long term. So I get it, but then I look at Verizon and I wonder, Verizon stayed in the 50s and now has dropped to 44.63 and pays a tremendous dividend. I mean, Verizon is one of those, they pump cash out every quarter. And there's nothing wrong with Verizon's business, right? But for some reason, AT&T sneezed, Verizon caught a really bad cold. And so you have to go back a long time. If you go back 5 years, you saw this price in 2017. We're at 5G. Things are faster, better technology, and yet there you go. I bet if we look at IBM, do we get a similar pattern? No. IBM's up. IBM looks great, which tells me we're probably not making the right decisions there. There you go. Intel. Intel is down close to its 5-year lows. It did hit 35. We're at 39. So Intel's another one of those where it's been a really tough stock to look at. And so I would watch out. And so I would watch out with T. I would watch out with Verizon. Ameriprise Financial is not one of your high flyers, money managers. But take a look at that stock. This was always like $150 stock. It popped to 300, so it doubled during the crisis, post-crisis. That's at 230. I'm not sure. So what else did we see in the market? So, we always look at fixed income, and I got a lot to tell you about fixed income. I'm very upset about it. So let me go back, though. And I got tons of pages open, hundreds of pages open, but let's just start here. So the Dow Futures are down. Okay, I get it, Jeff. Dow Futures are lower. Stocks are going to go down. It's a summer, who knows, right? The VIX is down, which means no one's really worried about a big decline. The odds are the market's going to be range bound. Look at that. The euro dollar has recovered, so we're not going to break the buck with the euro. Bitcoin's trading right in line before we left for vacation at $21,100. So no action there. The Nikkei's down slightly. I think I looked last night, and mainland China was up. Not seeing much, right? But the thing that I look at is fixed income. So 30-year Treasury bond yields over a year. I mean, they're still up. They were at 2, right, when we were in easy money time, and now they're at 3. Yeah, it does. Verizon has a very strong position. Yeah. And did not get as distracted as T. Yeah. Verizon's pretty well run. Maybe we'll do a little dig into the earnings when they come out. But but again, Verizon has not 5 years. How far back do you have to go? Yeah, it was a $20 stock in 1992. It was a $30 stock. Gotta be really careful about this stock. This stock has history of trading in the 30s. I can't even imagine it's going to trade in the 30s again, but yeah. One of the things we liked about Verizon is it didn't move. It would go up, it would go down, it would actually just bounce. And so very, very low price volatility, very low risk of holding it in the short term. But obviously in the long term, tons of risk. So 1 month treasuries are at 2.1% interest rate. It's a 1 month risk-free rate of return. Okay, 2.09. I bet if I go to bank rates, I don't want the best. I want the best money market rates. Talk to me. 2%. So I can get over 2% FDIC insured, no minimum balance. Not IRA. I don't even need savings. Just look at we keep savings actually. It does pretty well there. Those are some very high rates. 60035. Deposit amount is $100. And go. 2.02. That's a super high rate of interest. Even CIBC, which is a pretty solid, 1.66%. And so risk-free rate, very, very high now. But then your 10-year is only 2.75%. And in fact, over the year, it's still up, right? Still up. But not nearly up as it was. In the 30-year as well. And so I look at this and I think long rates are up. Long yields are down, which means long bonds are more expensive. If I go to futures, I can show it to you. The 30-year bond at 142 has recovered dramatically from early to mid-June. It's back to where it was in May. It's interesting, right? 2.9, right? 3.0 yield. The 10-year has fully recovered as well from its bounce. The 5-year recovered. The 2-year has not recovered as much. So the 2-year yields, will be higher, which makes sense. So you've got an inversion of the yield curve coming, and the 30-year bond, the 10-year note have basically have kind of gone along with it. And so I'm not sure why tons of money are pouring into 30-year treasuries and 10-year treasuries, especially at a time when inflation's high. It's got to be recessionary fears, right? Makes sense. We're heading into a recession. Times are rough. So let's take a look at some commodities that are recession sensitive. Right? Crude oil's down. I mean, it's up right now, but it's under 100. The Brent at 107. That's crazy. That's almost an $8, like a 7. Jesus Christ. I'm sorry. $8.35 spread from West Texas Intermediate, which is Texas, to Brent Crude, which is UK. That spread is quite large. It shouldn't be that large. So there's a question about why is Europe and North America diverging. You can argue it's the Russians with the Nord 1 gas pipeline. By the way, they went down to 20% capacity on the Nord 1 pipeline. So they are punishing Europe for those sanctions. Gasoline at 344. You know, if you buy 42,000 gallons. Silver up over 18. I went on vacation. It was below 18. Kind of interesting. It didn't touch there. Copper at 342 is making a recovery. Gold's down. Gold's down. I'm not sure I see any reason why gold shouldn't be down either. So the euro had a tough day yesterday, last night. Dollar looks good. So the question is, what's going on with the markets, right? Is there anything worth really talking about? Crypto, right in range there at 21.1. Not much to talk about. So we do have a Federal Open Market Committee discussion coming up. And so we have to see what they're going to do with rates. You could see a European Central Bank. They're talking about rate increases. You've got the Fed probably going to do rate increases. McDonald's revenue is down. Walmart profit, they're basically saying profit will be down 10%. I'm always sad when Turkey messes up. I love Turkey. I love the country of Turkey. I've been there. I've done business. It's good. It's a good place. It needs our help, if anything. Our advanced technologies, our way of doing business, super smart business people in Turkey just lack the capital. You know they have 17.5% interest rates. We're sitting there fighting with 1% interest. 17.5% statutory interest rate. I'm sorry. It's hard to be Turkey right now. And I love the Turkish people. I love the Turkish markets. Anything we can do to help them, I would help them. And a fellow member of NATO, which is always helpful. So what did we see, let's say, over the past week? Yeah, I was gone for a little over a week. So what did you miss, Jeffrey? The banks are up like crazy. Apple seems all tech, except for IBM, which I called out as a destroyer of economic value. It's fine now. It's can't give IBM a hard time. It's hard to be IBM. There it is. Verizon's down 11% this week. AT&T's down 10% this week. But of course, T-Mobile US doesn't have the same legacy problems. Just different market, right? A younger, more aggressive market, and maybe people that are a little more nimble, a little more flexible in these tough times. So interesting to see that T-Mobile US isn't moving. I think there's a play here, by the way, with AT&T and with Verizon. It's not the play that you think it is. It's not, hold it for a dividend, give it to your grandchildren. I think there's a different play. And Verizon, we're going to have to take a look. So, what else do I like to look at? KRE. KRE is an S&P ETF for regional banks in the United States. So when we look, and we had talked a fair bit about the regional banks, and this has hit about 57, 58, and now we're up to 62. So we've recovered a little bit. It's nice, and it looks like it's outside the channel. It's not just a little bounce. It's a fairly big recovery, and the reason that I think this is recovering. 1 month treasuries at 2.1% means the banks can raise interest rates that they charge without maybe raising interest rates that they pay. Now, we looked at bank rate, and you saw that if a bank wants to bring in money, they're going to have to pay 2%. Lending Club, which we looked at on the show before, Lending Club's paying 1.52%. CIT, an asset lender, 1.65%. Synchrony, an online bank. It's actually a pretty good bank. We tracked their stock, by the way. But you're going to have to pay a fairly, healthy interest rate to attract money. My Banking Direct, which is New York Community Bank at 2%. Discover at 1.3, Ally at 1.25, Sally Mae's paying 1.2. So 2%. So if you're a bank, you've got to start paying up. Like for real, you need to start paying up. You need to start paying out more interest. But if most of your depositors are kind of locked in, maybe they have loans with you, credit cards, and you tell them, look, if you're going to pay fees if you don't keep your money in our bank, maybe for a little while you'll keep it rolling. But so they're boosting their interest income. But my guess is, as you look at the banks, operating income overall is probably not as strong. So KRE is something to keep your eyes on in terms of the health of the banking industry. You could see it peaked in early 2022, and it has been in a downward spiral since then. But it's nice to see a little healthy bounce there in the regional banks. There were other things that I saw that I thought were important to share with you. We always look at the COVID. It's not bad. I mean, what's interesting is the number of COVID cases that we know about at 120,000 7-day moving average. I mean, it's up, but it's not terrible. New hospital admissions came down below 6,000. The trend is still up, and with all the people we saw out, I'm sure these numbers are going to go up into the summer. It makes all the sense in the world to us, but even our president just caught it, which is interesting. But, COVID maybe not as big of a play. One of the things I did want to talk about, so Biden was quoted, so I actually saw the clip. And he did say this. He said, the unemployment rate. So he said, we are not going to be in a recession in my view. So Biden is predicting whether we're going to be in a recession or not. I didn't know he was so good at economics. He also doesn't like the definition of a recession, so he's saying that the Bureau of National Economic Research, the BNER, he wants to use their definition, which is effectively a recession is when the National Bureau of Economic Research, a nonprofit group of economists, says it's a significant decline in economic activity, which is spread across the economy and lasts more than a few months. So why don't we just say, a recession is when people don't feel so good for a long time and they have to take an aspirin. No, thank you. I like the definition of a recession. We've had it for a very long time. It's 2 quarters of negative economic growth, back to back. When that happens, the stock market falls. Sometimes a recession can be longer. You could have 3 or 4 quarters of negative income, negative growth. It has to be real economic growth. So whatever economic growth we have nominally probably has to be up over 10% growth in order to outstrip inflation. So I would probably go 95% likely that we're going to see a recession. But I love what Biden said. So he says he's not wrong. Unemployment rate is still low. That's a rearview mirror. Hell yeah. By the way, the companies I'm looking at aren't hiring anymore and are laying people off. But I guess when you're the president, you can be thoughtful on what you're not looking for a job, right? So you're just whatever. We still find ourselves with people investing. Okay? My hope is that we go from rapid growth to steady growth. So we'll see some coming down. He's speaking real specific there. We'll see some coming down, right? But I don't think we're going to, God willing, I don't think we're going to see a recession. So when the President of the United States invokes God and hope, I got to tell you what that reminds me of. Yeah. I gotta tell you what this reminds me of. So I've been in sales a long time. I need to get you a book off my shelf. I have 2 copies of it because I love the book so much. Hope is not a strategy. I don't know if any of you have been in sales, business to business, large deals. I mean, I used to work with clients and we would work on $100 million to $1 billion deals. And there's a whole process you have to go through to structure the deal, work the economics, work the terms and conditions, go through legal, and then go through all the client approval processes to make sure that it was actually a good investment for the client. Sometimes even getting board approval. And there are salespeople that would just sit back and say, "Oh, I hope the deal comes in this quarter." And you'd be like, "So what's your close plan?" "Well, I don't have a close plan, Jeffrey." At that time, it was probably Mr. Cohen. "Mr. Cohen, I don't have a close plan. The client told me they're going to sign by March 30th. Okay? Do you know what their close plan is? Do you know what their plan is?" "No, they won't show it to me." So how do you know they're going to close on March 30? What are the steps that you're taking? What are the steps that your clients are taking? Did you write them down? Are you in sync with your client? "Well, I don't like to do that. I just pray every weekend at church with my spouse, and I hope I come to the office, I check my emails, maybe I'll watch a few videos, and I just hope that the deal's going to close." Well, those deals never close. Something always goes wrong, and they always blame somebody else. In this case, I think the president is getting ready to blame, after blaming all the previous politicians and blaming Vladimir Putin, he's probably going to blame Europe. He's going to blame the oil industry. He's going to blame the food industry. He's going to blame everyone but himself. Because what the president should be doing is he should be making a checklist. How do I improve the economy in the United States? Now, it doesn't have to be a fancy list. It could be 10 items. Number 1, increase production. Number 2, reduce the cost of hiring and having people. Number 3, reduce tax and regulatory burdens on specific industries I care about. Number 4, do something to help retailers not take a total bath on their inventory. Because truthfully, if the stores are full of goods, you could actually ease up some of that inflationary pressure. So maybe help the businesses that have aging inventory to stay in business. Number 5, work on roads and infrastructure. It's still a good investment for most states. Number 6, number 7, number 8, just go through a list and then tell the American people what you're going to do. I worked with my advisors. I'm going to give 30 days for comment. I'm going to open up my Twitter feed and you tell me what you think, right? Are these the 10 right things? Is there something I missed? And then work and report out. Now, the president doesn't have to do it himself or the vice president herself. A whole team of people. You could put 100-person special project on each of those 10 items. And at the end of a quarter, you report out, we made progress A through F on these items. Here's what we got to do next. And look, the economy's picking up. We're boosting exports. We've weakened the dollar. We've lowered interest rates. We've done whatever it is we had to do. We fought inflation. We reduced the money supply. We lowered taxes. We did whatever we did, right? Go do something. Don't hope and invoke the name of our Lord about the recession. That's so stupid. Can't take it. I'm sorry. For those who voted for Biden, I'm just very sorry. And for those that are maybe overseas watching, I know we have a lot of folks from Indonesia, from France, Germany. We're stuck with a president that really is focused on things that matter, but they're not good for the economy. He's focused on climate. He's focused on equality. He's focused on peace, love, and understanding. Now, what's so funny about peace, love, and understanding? I love that song. But I sing that song maybe once a month. That's not my mandate. My mandate is to make a living and raise a family, right? Build a business. So it's not about peace, love, and understanding. We have a president that's about peace, love, and understanding. I think it's terrific. So, anything else to talk about? I've gone on and on here. Let's see. Maybe there's some data about the markets you'd like to know about. First off, we look at FINRA, and we see corporate bonds were down yesterday. Again, 52-week lows are greater than the 52-week highs. We look at agency debt, which is typically mortgage-backed, and advances are ahead of decline, and that's because your government interest rates are down. Down and falling at the longer end, right? Short-term money, who cares, right? Those are adjustable rate mortgages. You may securitize them, but they're a whole different animal. We're talking about conforming 30-year mortgages off of a 10-year treasury note. Yeah, mortgage rates coming down. Okay, this is interesting. So this is our mortgage-backed securities. It's a very simplistic chart. You actually see they've recovered. This is an average conforming 30-year uniform mortgage-backed security at 4.5% interest rate. We can look at the same conforming at a 5% interest rate, and you can see from June 6th, you've actually seen a little recovery. It's flat to slightly higher, and 30-year fixed rate mortgages are 5.5%. That's not bad. Trust me, banks are still making their 3% margin. They're still charging their points and their fees. They're still getting rich on those mortgages, but they're now a little less expensive than they were. So that's helpful for economy. What else is worth looking at? You know, when you're away on vacation, you always wonder, right? How'd the Russell do? Look at a daily chart. You know, the Russell bounced up. Russell recovered. I guess no one asked me, right, when I was on my vacation, hey, should we go up? Should we go down? What are we doing here? NASDAQ bounced up higher. And let me guess, the S&P bounces higher. So we're in an interesting market situation right now. Yeah, the S&P bounced to 4,000. It's very interesting, right? So equities have bounced higher. If we look at the E-mini S&P 500 futures, you can see volume is lower end, right? You know, it's the summer. But equities are higher. NASDAQ futures. Yeah, I'm looking at much lower, you know, not bad volume. Not bad volume. Coming up. It's not strong on high volume, I guess is the point. But it's the summer, you wouldn't expect that. So you got a nice little summer rally here. Maybe just sit back and enjoy it. Hey Jeff, we got a summer rally. That's great. Where's the summer rally? Well, it definitely wasn't in tech. It was in financial services. Energy. I don't understand a summer rally in financial services and energy, but and in healthcare. But that's what we have. So I want to thank you for listening. There's always more to talk about. Thanks, Gregory Jones, for the commentary. Appreciate it. And just remember, we talked about some poor performers. We talked about AMP, T, IBM, Intel, Verizon. We talked about KRE. And we talked about the indices. Talked about SPY, IWM, the Russell. And I did not talk about any stocks that we own or have a position in. We kept it clean today. So thanks very much. Thanks for listening. Good luck in the markets today. I hope you make money. Maybe one last thing to look at, right? What are the stocks that are moving? So maybe we go back. We just take a quick peeky-boo, right? So if we look at stocks where we have a position and we look pre-market, you see Hallador Energy is up, Corbis is up, AMS is flat. Let's take a look at the Walking Wounded. These are stocks that have been down for a long time. And you see Walmart is still down almost 10% pre-market, Coinbase, Kohl's, Bed Bath & Beyond, Deutsche. Interestingly enough, you got a little bit of strength in NGL, which is always interesting. That's they process water for oil and gas companies, and a Freeport McMoran, right? So a copper investment, Cleveland Cliffs, which is iron ore and steel manufacturer, Carlyle Group. So these are up pre-market. How are the banks doing? This is an overall list of banks. This is not a curated list of banks. And you see, one of them down 4%. The rest are within 1 to 2%. You got some up, 1 over 4%. The rest, 1 to 2%, or 0 to 1%. Interesting. So banks not looking that positive, but not a big move either way. We look at our money managers, pre-market. No conviction either way, pre-market. Crypto and physical miners. Physical miners, no commit. Crypto down. It's a lackluster summer morning. So what do I do on a lackluster summer morning other than go to the gym? Or maybe go for a walk, go to the pool, right? Relax. What I do is I do due diligence and I do research and I try to find a sector where there's money to be made. And the bets that we make now in the summer may take a few months to pay off, but I'll take a look at the regional banks and I'll look at, let's say, price to book. And there are still some banks out there, like a Citigroup, that are at less than 1 times book value. Now, a bank at less than 1 times book value, right? That's pretty healthy right there. I like that. I like a discount. I'm going to look at their earnings, and I'm going to look at their investment portfolio, and I'm going to try to figure out, right, are these positive? Now we look on the other side, and we look at price to book the other way. And so the question is, where do you want to be? Do you want to be long, low price to book, or do you want to be short, high price to book? I'm looking at First Financial Bank shares, and this at Google says it's trading at almost 5 times book. Service First Bank shares, almost 4 times book. That's worth a look. That's worth some due diligence today. It's the summer, right? You can make your bets, you can take your positions, and then just wait it out. You may not make money, in the first day. But you got time in the summer. Summer's a little slow. So, again, thanks very much for watching. Appreciate it if you liked the video. Hit the subscribe button. And tune in. We come online sometime around 6:45 or 7 a.m. each morning before the trading day. You take care now. Bye-bye.